Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities. We're going to start on the weekly time frames and then zoom in. The dollar is still hanging on. We did get a bear break on the dollar on the daily time frame. So far, not a lot of follow through, but we are still anticipating a daily lower high compared to 97.71. We had a double top and then lost the daily higher low pattern. So that's certainly notable. And we can see any bounce from here that's under 97.71 is just a lower high. Key support in the short term down to 96.17. 96.04, and then 95.68 after that. So the weekly time frame is still just fine overall for the bulls, holding exponential moving averages. It'll be very notable when we get a bear cross of those exponential moving averages on the weekly time frame. That's not close to happening at this point, but noting that, the bull signal gave us multiple months of follow through. The previous bear signal gave us a whole bunch of months of follow through. So that's something that we're keeping an eye on as well. But bulls still maintaining strong. We are still looking for that daily lower high, however. Gold seeing a bit of an upper wick on the weekly time frame. Nice higher low and higher high follow through. And we are seeing the correlation, the inverse correlation with the market pick up a bit, where market weakness is certainly helping the gold bulls. Keeping that in mind, we are anticipating that a short-term daily oversold bounce in the market is coming in the near term. And we're going to be watching to see how that affects gold. Is that going to lead to gold pulling back and potentially losing the daily uptrend? At this point, that daily uptrend is very easily intact. 1241.58 is the last higher low. Anything above that keeps the bulls in full control. After 1266 resistance on the weekly time frame, we're then going to be looking at 1272 and 1284 as the next couple of resistance levels. Look at the exponential crosses here. The bull cross on gold happened back here on the weekly time frame in March. We then saw the bulls keep control pretty much until April, so almost a year of that signal. Then the bear cross, multiple months of downside, and now a potential of a bull cross. If we look out on the monthly time frame a little bit longer term, we are just looking for a monthly lower high to be set. This has me cautious as a gold bull. There's a lot of space where we could see follow through, absolutely. We could go all the way up to 1320 from here, which would still be huge gains for the bulls in the short term. But just keep in mind from the broader perspective of things that we had a double top on the monthly back here. And after this significant drop, we are still just going to be looking for a monthly lower high forming. So if we lose the weekly uptrend, which again, not at risk of losing at this point, this bounce is just getting going, but lose the weekly uptrend and our monthly lower high will be set. So that's something to be aware of. Bull miners having a bit of a tough time. This is one of those scenarios where we have gold bullish and the market's weak. So we're getting a bit of tug of war. The best case scenario for the bull miners is when gold is bullish and the markets are bullish. Don't forget that the bull miners are susceptible to market correlations. So we have a big upper wick on the weekly time frame. That's certainly having the bulls a bit cautious. The daily chart volatility has picked up past couple of days. And if we zoom in on the 4-hour time frame, that's what I'm watching. I'm watching the high, the low of the pullback. Lower high was set at 2084 on GDX, and now the bulls are trying to form a higher low. So watching the tightening 4-hour pattern, if that 4-hour pattern breaks bearish, the daily uptrend is going to be lost, and we're going to be looking at weekly consolidation, and the bulls will have to form a higher low compared to 1872. Much different picture here on the senior miners than the junior miners. We look at the junior miners on the weekly. We never broke to a higher high. We double topped 3031 and 3029. Nice bearish entry opportunity there. But if we just compare it to GDX, 2051, and we got up to 2147. So essentially 5% follow through on that bull break, which would result in 14-15% follow through on the leveraged ETFs like NUGT, whereas GDXJ did not even break that resistance level. So at this point, if you've been watching these videos, we've been saying it for months. If you are looking bullish, you're looking at the senior miners. If you're looking bearish, you're looking at the junior miners. So a double top on the weekly time frame. The daily chart, let's look at the 4-hour. So the 4-hour is in a similar pattern. Lower high was set at 29.35. The bulls are trying to form a higher low at 28.45, but we don't have enough follow through to be convinced that it has been set just yet. And tightening 4-hour pattern is set to break probably, well, actually Monday's the half day. So if not Monday, then certainly on Wednesday when trading resumes. So bull miners still holding on the daily chart. But if we break that 4-hour pattern bearish, that will tell us that weekly consolidation is underway. Oil is certainly due for a bounce, not giving up on the oil bounce. I've just shifted my focus that I'm going to be playing the market bounce rather than the oil bounce, but you could be certainly looking to play this bounce as well. Again, the monthly time frame just falling off a cliff for 3 months in a row. 42.03 is a key support that's approaching. The weekly time frame, the RSI, is down at 25. Bear flag was confirmed. The daily RSI is currently down at 31, and these weak little bounces have helped cool off that RSI, so it's not too extreme. But we need 4-hour trend changes to indicate that we are getting a bounce underway. So again, at this point, any bounce on the daily for oil is just going to be a lower high under 53.24. So we're not going to change this daily trend anytime soon. It's going to take probably a week plus of bounce and then higher low and higher high to even get that daily trend going. But just keep in mind that we're keeping an eye on the market bounce and the oil bounce to coincide with each other, and that I do believe that oil is going to give some significant bullish opportunity in the short term, looking for this monthly time frame once the bottom is found to bounce and then set a lower high, but certainly going to be looking for a 10 to 20% bounce on this longer term time frame once that low is found. And of course, if you're playing the leveraged ETFs, a 10 to 20% bounce on oil results in, a 30 to 50+% bounce opportunity in UWT. So that's looking long perspective on the monthly time frame. But at this point, that's a falling knife, just like the S&P 500. There's no indication of the bottom being in. We just know that as we approach that $42 support, that the odds are pretty good that the bulls are going to attempt to defend it with RSI levels so extreme. Natural gas, we switched over contracts here to NGG 2019. Weekly time frame is trying to establish a level of support and then bounce to form a lower high. But at this point, the daily chart is a potential bear flag. So we're getting a bit of mixed signals. The daily chart is a bearish pattern, but the weekly chart, just visually, I would be looking for a support level to be established after the clear bear break and for a bounce to form that lower high. So keeping a close eye on the tight range that we had over the last couple days of this trading week. 3821 is the most important resistance level. And as far as support goes, it's 3537, 3514. There's a whole bunch of supports here established, and we can even draw, if we don't want to use the price levels, which I would personally prefer using those price levels, but we can draw some trend lines, and actually looks like it would just be, let's see where we would draw it from. So I take that back. It looked visually like we could get some decent trend lines there, but it does look like we can get a solid uptrend support line to be keeping an eye on as we do maintain these higher lows. So that's the uptrend support that the bulls must maintain along with the higher lows. And 3821, if that level breaks, there's some nice space to the upside, which would negate the potential of that daily bear flag. So if we break 3537, the odds of the daily bear flag will increase significantly. If we break 3821, the potential daily bear flag will be negated. And you can see the exponential moving averages here on the 4-hour time frame. We've seen a bear cross since the 20% drop here, 20% plus drop, and now the bulls are trying to see a bull cross if we can break that 3821 level. So keep an eye on the natural gas. At this point, I personally would be looking for a bull play on this break, but not necessarily a bear play. And again, that's because we are a bit extreme to the downside from the pullback of over 20% at this point from the high of last week. We have pulled back a significant amount, 22%. So that's why I wouldn't be necessarily looking for a downside play and would be limiting myself to play the bounce to the upside. But my focus is on the S&P 500 and oil. I probably won't be trading the oil bounce if they occur at the same time because I will be focused on the SPXL 3 times leveraged SPY bull. I just put out a video about that trade game plan setup, and we'll see how it all plays out. Keep an eye on that correlation with gold if the market does get a bounce going. Appreciate you watching. Happy holidays. We'll see you soon.